Hello, welcome to our investment series. Today we are very honored to have value partners Alex to share with us some insights about gold. Welcome Alex again.
Hi Elton.
Yeah, and Alex, can you let us know briefly how was gold performing in the financial market in the past few years?
Yeah, sure. When there are extreme or major events in the market, gold is regarded as a safe haven asset or tools to stabilize the performance of the investment portfolio, such as 2008 global financial crisis, the trade war, or the recent COVID-19 pandemic. The performance of gold is outperformed the capital market or major risky assets. Since the outbreak of the COVID-19, the price trend of the gold has remained volatile and hovering the level between $1,600 to $2,000. In 2022, due to the tense situation of Russia and Ukraine war, the price of the gold has rose to $2,000. The rebound and the rise of gold price was restrained by the impact of the high US dollar index over the 20 years high. But as US inflation continues to fall, the market expected that the US Federal Reserve will slow down the interest rate hikes in the future. So we expected the hike of US dollar and inflation will benefit the gold price in 2023.
I see. And actually, when it comes to investment and investment portfolio, why is gold an important part in the investment portfolio?
Gold can migrate losses in times of market stress, market downturn, especially during the period of abnormal volatility. And due to the unique property of downside protection and the correlation between the gold and risky assets, gold is considered as a safe haven or portfolio stabilizer during the market downturns. We can look back to the past events such as 2008 global financial crisis or the recent COVID-19 pandemic. The gold outperformed 50% relatively to US equities such as S&P 500 and MSCI Emerging Markets Index.
I see. And as China is also entering into a post-COVID era, and in the West it is a high inflation environment, is gold a good investment for combating inflation?
Consumption from China has been suppressed by the zero-COVID policy, while the retail or the consumption has fallen. So the China is currently the only place that has not fully opened up to the world. So and there is increasingly likelihood in the coming years that some form of relaxation of COVID policy. And should China gradually reopen in 2023, the compensatory consumption rebound could lead to a demand shock or to the world economy, so which could offset some of the falling inflationary pressure. At this time, holding gold can effectively hedging on inflation. We can see that gold has a historically held in periods of high inflation. Since 1971, in years of high inflation rate of over 5%, we can see that gold price has an annualized return of over 20%. Even in inflation rate around 2 to 5%, the gold price has an annualized return of over 8%.
I see. Let's zoom out even a bit. How is gold played out in the international politics, especially among the competition between countries?
Yeah, in particular, the weaponization of the US dollar food thrift has likely triggered some reconsideration of many emerging markets central banks on how they manage their reserve, especially reducing the dependence of US dollar. In recent report by the World Gold Council, purchase of gold by central banks has reached a 55 years high, and this is just the first 3 quarters of 2022. So unlike other currencies whose supply is influenced by the issue countries. The scarcity of gold is like one of the main reasons why global central banks buy gold in bulk, and as such, asset class can help diversify their reserves. So it is expected that central banks, especially emerging markets, will continue to diversify their reserve with gold, and this is also one of the most favorite assets during the period of high inflation.
I see. Then let's zoom in now. What is the advantage of gold ETF over physical gold?
Yeah, comparing to holding physical gold, the minimum entrance fee for gold ETF is lower, and it is more convenient for investors to buy and sell stocks partially by stages. Moreover, comparing to like trading paper gold or physical gold, gold ETF has a narrower bid-ask spread, which can effectively reduce the cost of investor buying and selling gold. In addition to like avoid the remelting, storage, or insurance costs for holding physical gold, gold ETF actually can effectively help investors to carry out some short-term or medium-term deployment, provide significant liquidity, and also allow them to trade on the exchange for like asset class allocation and conversion.
I see. And what is the advantage in investing in particular, Value Partners Value Gold ETF counter 3081?
Yeah, so our Value Gold ETF tracks London morning fixing price of gold per ounce quoted in US dollar, and it is published by the London Bullion Market Association (LBMA), and it is also the lowest tracking error and tracking difference over the year for physical gold ETF among Hong Kong market. And our gold ETF holds physical gold bars in Hong Kong International Airport Precious Metal Depository, which allows redemption of gold bullions through a participating dealer. And as mentioned before, our ETF holds physical gold bars in Hong Kong. It could help investors eliminating the geopolitical risks, also achieve risk diversification.
I see. And what is the latest asset under management of 3081, and what is the management fee about?
Our Value Gold ETF is the world's first gold ETF that provides like Hong Kong dollar, renminbi, and US dollar trading counters, and it is also a like multi-award-winning product with over 12 years of solid track record since 2010. The current asset under management is around 1.8 billion Hong Kong dollar, and the ongoing charge over a year is maximum 0.4%, which cover all costs including management fee and fund operating costs.
I see. And lastly, let me also let audience know the counters of the other currencies as well. 3081 is the Hong Kong dollar counter, 9081 is the US dollar counter, renminbi counter is 83081. All of these counters are trading in lot size of 100 shares. The minimum investment amount is about 4,400 Hong Kong dollar. And lastly, may all investors please beware of the risk in investment, whether it is stocks or gold or forex. And lastly, we have to say thank you to Alex again. Thanks for your insights on gold today.
Thank you very much, Arthur.
Thank you.